Agnel asked, he said, if you can help us understand if today's rally was more of old business or if it was new business, right? Uh, how to differentiate? Okay, so that is a very good question, and best explained on Nifty chart. All right, this is one of the topics that is a little confusing in market profile, and once you understand it, it will help you differentiate between real moves and moves that have low probability of working out, right? Okay, so this on the Nifty chart, all right, last trading day, that is the September 1st, I believe. Yeah, September 1st, yesterday. So here you can clearly see that this particular pattern is called as the double distribution trend day. So what does that mean? First and foremost, it is a trend day because there is a clear trend that market is moving in one direction. But then why we call it double distribution? You know, in market profile, all the price action that happens is arranged in such a way that it resembles a normal distribution curve, right? If you remember your statistics class, you had something like this, and there was a mean and then there was a deviation, sigma, and all those kinds of things. So if you rotate it 90 degrees, you will find that it now looks like this, right? Or rather, this market profile looks like the normal distribution curve. So what we refer to sideways price action whenever it happens on a market profile chart as a distribution. So this is a distribution, this is a distribution. These two distributions are well balanced, right? This also is a distribution, but you can see that it is skewed to one side. Make sense? In this particular day, there is no distribution because there is no mean as such, clear mean where, you know, in this case or in this case, like you have lots of trading activity going on this day, there is no such mean, right? So there is no distribution here. Okay, now in this particular case, that is the September 1st, the day starts with a small distribution, right? Okay, good. And then it breaks out and moves away from it and goes to a new area and forms another distribution. All right. Now, very simply, whenever you have a sideways distribution like this, or the early part of this day, or the first distribution that I call D1, this one is D2. So, first distribution D1, what it tells me, what a distribution tells me is that buyers and sellers are in balance. All right. So, when buyers and sellers are in balance, you will move sideways and you won't move directionally. But then we have a breakout. Obviously, here the auction went higher because it ran out of sellers. Here, buyers and sellers were transacting with each other, and suddenly the sellers, you know, they vanish. They are completely absorbed by the buyers. There are no more sellers, and then what happens? Auction goes higher to find sellers. And as the auction reaches this zone, you can again see we start moving sideways. So what I can say is that buyers are again in balance with sellers. And in this imbalance phase, the buyers were obviously greater than sellers. Right? So what we have here is a classic, cycle of balance, imbalance, and again a balance. And this is the way market keeps developing all throughout its history. It always starts with a balance, then you get an imbalance, you again balance, then you get an imbalance, you again balance, and it just keeps going. Look at this, we start with a balance, we get an imbalance, we again balance. Alright? Here there was no distribution, we go lower and then we balance for 2 more days. Again there is an imbalance and we balance again. So this process will keep going on. But what is of interest here? Okay, let me clear all this. So what we know, this is the balance D1, this is the balance D2, and we have some imbalance in between, right? What does that tell me is that first buyers were equal to sellers, then buyers got better than sellers, but then sellers came back and matched the buyers. If you look at previous action, you can see that the previous balance was little lower, so there was again some imbalance. So again buyers was equal to sellers, buyers got greater than seller, again balance, again greater than seller, again balance. So Every time the price is moving higher, supply is coming into the markets. All right. And whenever it happens on a single day, it becomes especially a typical situation where what we know that initially the buyers tried to push the auction higher, but it again encountered supply. And whenever you have this double distribution trend day, all right, it tells you that sellers are not giving up. Okay. One more thing. Whenever you have a balance, right, and you have buyers equal to sellers, and everyone has an opinion on the market. So buyers expect that market will go higher, sellers expect the market will go lower. Sellers are selling here and the market breaks up. Okay. Now what do you think the sellers in this zone are thinking when the market is breaking out? They are worrying how high the market will go. Okay. Where is the right time to exit? Some of the people may have their stop loss just above the day's high, which was around C and E period. So this results in short covering. Alright. So one, we saw that the double distribution trend is like a balance, imbalance, balance. In this case, it is to the upside. So what we know that sellers are coming in at higher prices and they are not giving up. Second, anyone who sold in the lower distribution, they had to cover their shorts as soon as the market started to go high. Obviously, these are short-term sellers. Okay. Now, what is happening here is that whenever the shorts are getting covered, if you are familiar with the open interest concept, right? So, if I buy one lot and if someone sells one lot, I did not have a position. This is a fresh position. The seller also did not have a position. This is a fresh position. It will be matched against each other and this will create one open interest. Alright. But now I was a seller here and the market went higher. I had to cover my position and I sold one lot. Obviously, there will be some buyer who will buy this lot, but these will be matched. But you need to understand that I am not creating a new position here. I had an original position and I am just getting out of that position. So this does not create any open interest and the open interest stays 1. Make sense? So when we are trying to understand old business versus new business, what we are trying to understand is that, okay, new selling is not coming in. Whoever has sold, or new buying is not coming in. Whoever has sold, they are just covering their position. And when one side is just covering their position, whether it is a short position, long position, if they have bought, market goes down and they are throwing in their position, again it's the same thing. So when old positions are getting covered, it is called as old business. And old business, as Jim Dalton always says, does not have the power to move the market too much. So here we had short covering, which is clearly old business, and then again we go higher and some selling comes in. It tells me that this particular imbalance is because of short covering, and if it was fresh buying, it was new business, we would have seen continuation. We would not see this balancing happening. So this is how you separate old business versus new business. Short covering, alright, short covering rallies, long liquidation breaks, all these are signs of old business. What you have to look at is, once the old business is taken care of, what happens? So here, what is happening is, you see there is this nice balance and then we went lower, formed lower value area, and then again we go back here. This is the point of control. We spend a lot of time. So you guys know that I consider point of control and HVN as valid support and resistances. So we find a lot of resistance here, alright, and then obviously some people will come in and sell looking at the resistance, but the market goes higher, they have to cover their shorts, alright, and then we go higher and we form another balance, alright. So this short covering rally is old business, and this old business has resulted in some higher prices. Now the question is not that if this is just old business, market should come down, okay. If this is just old business, market should come down and it should tag this lower distribution HVN or point of control. This is the expected behavior. Now let's say Monday market opens and it straight away goes higher. What is this telling us? it is telling us that yes, this was some short covering rally. Obviously, some portion of it was short covering, but there was also some new business there, and that new business is pushing the option higher. So, how do you trade this situation? You need to understand is that you start with looking at the structure. What is the structure? Double distribution trend day. What does it tell me? It tells me that there was a balance, there was an imbalance, and new supply came in and created another balance. Okay, this is my first understanding. I don't have a trade yet. I just understand this. Okay, there was a balance, there was a breakout, and then again selling come in and new balance form. So selling is coming in at higher levels. It is not letting the price run freely. That is my first understanding. Second, what I look at is, okay, someone sold in this first balance and then short covering happened. So this rally has some old business. It is not 100% old business, but it has some old business. And if this is old business, the market is not going to sustain. And if this is old business, market has to come down. This is my second observation from this structure. First was that yes, higher prices is attracting sellers. Second was there is some element of short covering or old business in this rally, and if that old business is there, the market should not sustain. Now, when I come back on Monday, I have a very clear agenda. I have this small balance here. Okay, market opens in this balance, it is likely to continue balancing before it decides to break out or break down. Alright? Okay. Market can straight away gap higher and continue up. That will tell me something. Market can open higher, fall down. It can open inside, go up and fall down. This is one of the possibility. Or straight away market opens and starts trading in this lower distribution or even goes low. So how many possibilities I have? I have 1, I have 2, I have inside, opening inside, that is 3, and then opening lower, that is 4. Okay. Now, what were my assumptions? 1, sellers coming at higher levels. 2, there is old business. Now, if possibility 4 plays out, both my assumptions are proved correct, and I can expect the markets to tag the previous day low. So yesterday's low, when we open on Monday, this will be previous day. Yesterday's low needs to be tagged. Okay, that will be my expectation. So let's say we open somewhere here and market goes lower and it pulls back to VWAP, a small pullback even, I would look for shorts. That is how I get my trade. Number 1. If it opens higher, I will give it some time to see whether it opens higher and fails or not. If it does not fail, if it continues to move higher, again gives a small pullback to VWAP and goes higher, this is again a trade for me. Now I can be confident that yes, this has enough new business to open the markets higher and sustain. Okay, so this was my second trade. Third possibility is it opens higher and falls down. Okay, it opens higher and falls down, or it opens inside of the range, goes up and fails. So it creates a failed auction, or it opens higher and straight away falls back. As soon as it enters previous day's range, this small HVN, okay, of this upper distribution, as soon as it goes below that, I will be looking for a short. So let's say market comes here, you have a VWAP, pulls back to VWAP, you short for a test of this HVN of lower distribution and the low of previous day. Make sense? So this is again a trade I can get. Okay. So whatever happens here, I have a clear trade. Okay. Whether it opens inside and straight away moves lower, does not go even to test the high and all. Okay. I'll see what it does. It goes into this low usage area. It moves quickly and then again it pulls back to the VWAP. I have my short trade. Targets for shorts are obviously yesterday's low and the lower distribution HVN.